All right, if we take a look at pockets of resilience today, I want to check in on shares of United Health that are moving higher. This is one of those managed care providers. What's interesting is United Health had come under pressure because a month ago, the CFO said, oh, we're seeing elevated costs. People are going to the doctor. They're getting procedures done. And that sparked a big sell-off in the stock. United Health coming out with quarterly results that not only beat expectations, they're also nudging up the lower end of their forecast, and their medical loss ratio was actually exactly in line with what analysts were expecting. Our next guest is taking a hard look at this space broadly as it has lagged the market. Let's bring in Brianne Gardner, wealth manager and financial advisor at Raymond James. Brianne, thanks so much for being with us. Talk to us about how you're feeling about the market rally so far and why healthcare is getting some of your attention these days.
Yeah, I mean, I think we saw kind of the first half of the year, a pullback. We saw one pullback, but the market has really been resilient. We saw kind of the big seven, tech leading the market, but we're starting to see a little bit more improvements in market breadth. We saw consumer sentiment come out a little bit better than expected. And consumers are still spending. So it is showing, we see inflation continuing to come down in the U.S., both core CPI has continued to pull back. We saw in January of last year, we saw it at 9%, in January, 6%, now close to that 3%. So it is showing, a closer to a pause that we're looking for in the market. So, that is kind of more bullish than bearish we see over the next 12 to 24 months. From the healthcare perspective, I think that is definitely a high conviction sector that we like right now. And why we like healthcare is, great defensive companies in that space. So they can weather the storm if we start to see some volatility, which we expect the second half of the year, and even headed into a potential, recession. We think healthcare is a great position and are overweight the sector.
So it's interesting as you see these, positive things out of the U.S., the consumer resiliency, as you mentioned, the inflation. It sounds like you still want to get more defensive. Can you explain that?
Yeah, I mean, normally you wouldn't really see tech be doing well when interest rates are still going up. So, we think that was a little bit of FOMO, a little bit of this AI trend. And so we still think, there are chances for a recession. We don't see a deep recession coming, but whether that's in Q4 of this year or early into next year, we do think it is kind of inevitable just based on how quickly the Fed and Bank of Canada hiked interest rates, even being late to the party on the hikes. But we do feel like, with the data that's coming out and them still hiking, they are going to put us in a little bit of a dire situation. So we believe that, they're going to have to help. They're going to have to cut quickly, be able to pivot. And we want to position the portfolios for our clients to kind of be able to weather this volatility. We haven't even seen a 10% pullback this year yet. And on average, we see 10% pullback a year and 3 kind of 5 to 8% pullbacks a year. So we have seen low volatility considerably for the first half so far.
So I was talking about United Health. Is United Health a name that you would tuck into the portfolio?
Yeah, United Health is a company that we do own in the portfolio. We do think, even with improving supply and labor issues and normalizing demand, we do like healthcare. And I think there are some good entry points for other businesses we also own, like Eli Lilly, Merck. You mentioned United Health yourself, AbbVie. I think that too, as you mentioned earlier, with people now in COVID, they were worried, concerned with going to do all of these surgeries, doing these regular checkups. Now everyone is making it a priority. And usually in late business cycle and recessionary environment, people prioritize healthcare, and healthcare is one of the top performing sectors.
So it's interesting you mentioned Eli Lilly, because of course that's now part of the Ozempic craze. Their product is different, and that stock has run up. But, an AbbVie, for example, has performed very differently and doesn't have that factor. What is the factor that you're looking at for AbbVie?
Yeah, I mean, year to date, the stock is still considerably down. I think we see good potential upside in the space, and valuation is really what we're looking for in the healthcare space. So that's kind of where we've positioned. And those are the stocks that, have checked our list, have qualified based on fundamental and both kind of technical entry points. So we see potential upside in both those stocks.
Talking about picking something up that's a little bit lower, we had some guests on earlier who said, they're lightening up a little bit on tech and they're going into energy as kind of a resilient place. And even though energy hasn't performed that well, it's definitely performed better than the commodity. Does that kind of qualify in your lens of where you're looking, or would you stay away from energy?
Yeah, I think right now, because we are more active investors, we are tactically underweight energy. Again, we think this is just a little bit more of a short-term play for us. I think energy sector is far from the peak in 2022 that we saw, and usually, was the only positive sector last year in the bear market, up over 60%. And usually you don't see back-to-back results like that for the following year. So, we see a down kind of trending in oil prices, and that kind of results in downward earnings revisions that could remain a headwind for the sector. So I think tactically we are a little bit underweight energy, and also agree, have been trimming back our tech exposure. Just with the run up we've seen, I don't think the valuations are making sense anymore.
I'd love to get your take on what we're seeing with respect to earnings. It's only been a handful of companies so far, and United Health notwithstanding, Pepsi, Delta Airlines, the U.S. Stocks that have reported, J.P. Morgan, Wells Fargo, Citi, even throw BlackRock in there. They're beating expectations, but they're not really getting an enthusiastic reception from investors. What does that tell you?
Yeah, I think, us and how we're looking at earnings season, I think all eyes are going to be watching, on what the results are and how the market reacts to that. So as you mentioned too, we saw the big U.S. banks reporting Q2 earnings today. And I think analysts have been really doing their part to help these companies beat estimates by lowering the bar a little bit. The U.S. banks, they passed the Federal Reserve annual stress test, indicating they are well capitalized in a case of kind of a severe recession scenario. So we still see some upside, but I think in the U.S. banks, and we are overweight them and think they can weather the storm. We still own J.P. Morgan, Wells Fargo, we don't own Citigroup, and also own BlackRock. So, Citigroup is kind of the only one that's pulled back since reporting their earnings. And we still think there's favorable upside for a lot of these U.S. banks that are kind of the larger quality companies.
All right, Brianne.